What's up, guys? It's October 20th, 2025. We're going to do a 10-minute breakdown of the E-mini where we talk about trap traders, market context, and market cycle. If you guys want to see how I'm trading live, check out the membership section where I go over my live trades. Some are winners, some are losers. They're all based around second leg and trap traders. So yeah, let's get into it today. We had a gap up, continuation, rallied, and went sideways. Full-on market cycle. See what the daily, oh, that's the monthly chart. See what the weekly, we got the weekly on the left. We got the daily on the right. It's kind of looking good for the bulls. This ended up being a deep pullback, and now they're going for the high, and then they're going to try and go for a breakout and a measured move. Top from the bottom. So yeah, well, that's a pretty big measured move. Might take maybe a couple weeks. If they get the breakout, might take a little bit of time to get up there. Daily chart on the right, we can see this very big bar. It's an outside bar. All the bars after this have been inside bars in correlation to the outside bar. Excuse me, this is not an outside bar. What I meant to say is all these bars have been inside bars in correlation to this big bar. This is an inside bar with this bar. This is obviously not an inside bar of that bar, but just within this bar's range, all inside bars. So somewhat of a breakout mode pattern. And we'll see what happens. We've had 3 pushes down, and then the market's breaking out. It's a wedge bottom. Push 1, pull back, push 2, pull back, push 3. Market's starting to rally. Took a couple trades today. I wasn't able to trade for the easiest part of the day, but I did catch this leg here, and I exited, I think on this bar right around here. Took another trade. I got stopped out here. Apologize if you guys can hear something in the background. The high school is doing a football game. Don't think you guys can hear it though. Yeah, I took this trade here. I skipped this one because I thought this was climactic, and I ended up actually trading into the climax. So that was a stop out. Small risk though. And I took one more trade here that went to my target, but it was a little bit too late. Nice bear channel down. 1, 2, 3. Just count. 7 bars in a row, trying to get a second leg. Came very close to the shallow target and then rallied and almost stopped me out. And then it went to my target, but I had scalped out on this bar because that was almost the last bar of the day. So finished the day profitable, not bad. Again, I only look for second legs. That means I wait for a move in one direction, a pullback, and I'm getting in on that pullback. Second here. We have a gap up. We have a gap up, bar 1, big bull bar, closing on its high with follow through bar 2. Not the best follow through because there's a tail, and then bar 3 is actually an outside bar. It rallies and it sells off. So bar is below, sellers above, and then bar 4, big bull bar closing on its high. It's a tire pattern strong to get second leg, and it does with bars 5 and 6 being a pullback. I don't really trade the first 6 bars of the day, but I could see someone who wants to fade bar 6 and then make a quick scalp to the recent high or a little bit higher on bar 7. Bears that get trapped down here are going to short higher. They're going to get out break even on bar 10, and that's going to cause another rally. There it is. Rally, pullback, 1R, even 2, 3R was met pretty quickly in the day. That's a nice trade. Now we've had 3 legs higher. Leg 1, pullback leg 2, pullback leg 3. Could trade into this. This leg became climatic, and it was the last leg in the trend, first leg in this trading range. Same situation. Bears short the bar 10 bear bar right here. They get trapped. The speaker's throwing me off. I hope you guys can't hear that. So I guess if you're a 50% pullback trader, you wouldn't get filled on this trade. It's a trade we would miss. The only way to get in on this trade would have been to get filled on bar 10 on this trap setup, bar 6 and bar 10. So nice 3-bar rally. 14, 15, and 16 with a gap. I thought that it would be sharp to retest the high, and it was. That's why I took it. I was aware that we were in trading range because we have 3 legs higher. This is a nice leg, so my stop was down here. This is the swing point anyways. That's the correct stop. Bears are short down here, short more higher. The problem is bears are making money. Bears even got a leg 2 from the 18 to the 21 low. So bulls buy up here, they buy more lower, and then bulls actually got 2 legs, leg 1, pullback leg 2, testing the breakout point on bar 18, and then it sells off. Leg 1, pullback leg 2, pullback leg 3. So wedge bottom run to support, and then you can see the market starts to rally. That's where I made the majority of my money today. So what's the market cycle? The market cycle is breakout. Bar 5 is the first opposite bar, so I'm channeling. And when the opposite side gets a channel phase, excuse me, they do 18 through 21. That starts trading range. So we got the breakout, which the gap up is part of the breakout. Then we got the channel phase. Then we have a bear channel here. So now we're in a trading range. And then bears get the breakout, or excuse me, bulls get the breakout again, get 3 legs higher, leg 1, pull back leg 2, pull back leg 3, leg 1, pull back leg 2, pull back leg 3. Look, third leg, third, fourth leg, bear channel, trading range, bear channel, trading range. So the market cycle really helps us understand in context and how we can use that to find high probability trades. This was probably the easiest part to trade today. I was busy in the morning, so I kind of got caught trading this, but still ended up profitable. So we have a nice rally from bars 38 to 43. Somewhat looks climactic. That's why I got out right around here, because I thought we were going to reverse the trade range for the day, but then there's enough momentum for this to get its own second leg. It does. And look at the type of rally this is. It's not really. It's going kind of more sideways, but bullet box now, the bullet in the box analogy, you know, shoot a bullet in the box, momentum stays the same up to 20 bars. So 44 through 57 is kind of under 20 bars. So there's a little bit more bullish pressure, but we are going sideways. And finally, bears get a channel down 57 through 64. 65 is an inside bar, and it reverses, testing the breakout point of bar 58, and then sells off. Unfortunately, 71 didn't come one tick to bar 64. So if you're like me, you got trapped. I almost got stopped out here. But look, trading range behavior here. Test. We get a breakout test here. Sells off. Get a second leg. Breakout test here. Sells off. Get a second leg. So in trading ranges, breakout points tend to get tested. The extremes of the breakout points. So yeah, today was a quick one, guys. We had a nice rally, channel, and trading range. Hope you guys have a good one. Hit me up if you have any questions, and thank you for your time very much. Bye.